$2.4 trillion in options are set to expire today, and bullish bets could push stocks even higher in the days ahead. Here to break it all down is Jared Blikre. Jared.
Memories of 2021. Let me break this down. You said 2.4 trillion. That is a fact. This morning, 1 trillion expired on the open. That's because index options, most of them anyway, they expire on the open of the market. Now, in the afternoon, we're going to have options on ETFs, on futures, on single stocks. Those are going to be the PM ones. So this afternoon, PM, we got 1.4 trillion. And the way this breaks down is the S&P 500 index and all its derivatives and ETFs, 1.66 trillion on them. And then NASDAQ and Russell indices add another 320 billion, single stocks 430 billion. Why all this focus on what's going on in the options market? Because it has exploded recently, especially when we take a look at small caps. IWM, for instance, and options on that have just exploded this week. Now, this is forgive all the squiggly lines here, but there is a point. This goes back 5 years, and this shows the put-call skew out 1 month in the options market. What I want you to focus on here is just that when it comes to IWM, that's the small caps, we are at a record low, at least with respect to this data set, which is by Goldman Sachs. And the other indices, those are heading down as well. So this favors that call buying that forces options dealers to hedge their bets by buying the underlying stock. And when times are good, this is a virtuous cycle, and prices explode to the upside. This is something we've seen, especially with respect to the mega caps and a lot of growth stocks this year. And I can illustrate this just by showing you what's happened to the NASDAQ 100. Here's a year-to-date look. And I said recollections and memories of 2021 because back in the day, that was a huge strategy, just buying call options 1 day to prior expiration, basically picking up little lottery tickets and betting that prices would always go up. Of course, that ended in tears for many, and it took months and months and months of it not working to drain bank accounts. But nevertheless, kind of a resurgence of that activity. So all in all, going to be a really interesting day to watch this. By the way, just to dispel one common myth, we don't actually see more volatility on options expiration date, especially in the indices. Sometimes you see it in individual stocks, but for the most part, everything kind of balances out and we actually see lower volatility on these days, guys.